It is 18th of January on a Monday, and the time now is 1:35 p.m. in Singapore. My name is Dylan, and welcome to my daily trading analysis video. So today we're going to start off with Euro against the US dollar. Right, so without further ado, over here we have a 4-hourly chart, and the price is, we do see that there is a falling trend channel, and right now we have seen that the price has broken it once over here, and then it broke above it again the second time, which suggests that the price will appreciate further from here. So therefore we expect the price to appreciate further, and just to take you to the day one charts, we do expect that the price will retrace even further in the bigger time frame, and expecting the price to reach at least the price of 1.1114, which is the retracement level of 50% based on the Fibonacci retracement. Alright, so let's zoom into the smaller time frame in the 1-hourly chart. We can plot a rising trend line right here, and then with Fibonacci retracement, what we would like to wait for right now is for the price to retrace to a level for us to go for the buy, since we are expecting to appreciate further for the next couple of days or even weeks. So the price that we have identified to go for the buy is at the retracement level of 38.2%, price of 1.0878. Alright, so currently the price is at 1.0890. That's very close to the price that we are waiting to go for the buy, but probably price will still go down, will break a little bit lower till it touches the trend line before it rebounds further. Alright, and therefore we do also expect that the price may continue to appreciate further and forms a rising trend channel as it moves towards the top of the rising trend channel. Alright, so potentially we are actually looking at a profit of close to 200 pips of profits, with a risk of probably about 35 to 40 pips for if we were to buy at the price of 1.0873, slightly lower than the 38.2 retracement level. Alright, so that's for the euro against the US dollar. Right, next let's take a look at the Australian dollar against the US dollar. As we can see that based on the day one chart, price has already broken below the final exhaustion level at the price of 0.6917. That suggests the price will fall even further, and we do also expect the price to fall all the way to the price of 0.6663. That's the next final exhaustion level to be reached. And therefore, right now, zoom in the smaller time frame, we are looking for an opportunity to go for a sell as the price retraces back to the previous low, or rather previous exhaustion level, the price of 0.6970, and that has happened right now. And in the 1-hourly chart, we do also see that there is a probable falling trend channel that's forming right here. So let's zoom in the 15-minute chart with Fibonacci retracement from the top right here to the bottom. We do see that the price currently has kind of broke above the retracement level of 50%. So we want to be a little bit safer to wait for the price to retrace a little bit further to the retracement level of 61.8%, the price of 0.6933, or at least till it touches the top, or rather the falling trend line, as we can see right here. Alright, so in between the price of 0.6933 to 0.6952 will be the zone to go for the sell for the Australian dollar against the US dollar. Alright, so let's take a look at the New Zealand dollar against the US dollar. So similarly, we have the price broke below the previous low back in November at the price of 0.6434. Therefore, expect the price to fall further from here. And if you base on the day one chart, we do see the price has yet to reach the previous low, somewhere the price of 0.6243, all the way back in September last year. So right now, again, into the smaller time frame, we are waiting for the price to retrace to a level for us to go for the sell. In fact, what we can do right here is to plot a trend line from this point to this point. It does seem that it forms a falling trend channel right here. Alright, let's just make a little bit of adjustment. Alright, and here we go. We have a falling trend channel based on the 1 hourly chart. Price is retracing towards the top of the falling trend channel, and therefore in this case I'm going to pull the retracement level all the way back to here. Alright, and somewhere at the top of the falling trend channel is the retracement level of 30.2% at the price of 0.6493. So that is key level for to go for the sell. Do expect that the price may spike up a little bit because the previous key support is still somewhere right here at the price of 0.6511. That's about 70 pips above the retracement level of 38.2%. That is just something for you to take note, but at least we shall wait for the price to reach the retracement level of 38.2%, or at least touches the top of the falling trend channel before we consider to go for the sell. And that is pretty much for the New Zealand dollar against US dollar. Of course, we do expect the price to fall all the way back to the previous low at the price of 0.6243. So that is probably we can expect a total profit of 230 over pips to be made from this trade. So that's for the New Zealand dollar against the US dollar. Let's touch on the dollar against the Japanese yen. Alright, so we have seen that the price has once again broke even lower. Alright, and the lowest it has went to is 116.49. The key support level we expect the price to fall to is at 116.07. So there's still a little bit of a gap towards the key support level. So still expecting the price will fall a little bit further. So let's zoom into the smaller time frame in the 1 hourly chart, waiting for the price to retrace into the 15-minute chart. With Fibonacci retracement, we are waiting for the price to retrace even further. Although right now we are seeing that the price does seems a little bit exhausted at the 50% retracement level, but to be safe, we want to wait for the price to retrace even further to the retracement level of 61.8%, the price of 117.58 to go for the sell. We do see that based on the 1 hourly chart, the key support level will be somewhere at the price of 117.28, or probably somewhere even higher at the price of 117.40. So let's wait for the price to retrace further, at least to this level, then we can consider for the sell. But I do recommend to wait for the price to retrace to 61.8% retracement level at the price of 117.58. Then we will look for the sell instead. So that's for dollar against Japanese yen. Next, let's have a look at Aussie against the Japanese yen. Similarly to the Australia against US dollar, we have seen that the price has broke a new low based on the 1 hourly chart right here, and therefore I expect the price to fall further. And right now we are again waiting for retracement. So simply we just zoom in the 15-minute chart with retracement, Fibonacci retracement from the top to the bottom right here, waiting for the price to retrace a little bit further to the retracement level of 61.8% to go for the sell. And that's as simple as that. At least we do see that at the retracement level of 61.8%, that is previous support. So that gave reasons for it to go for the sell at that level. Of course, at the current level right now at 50%, it does seems like a pretty strong level to go for the sell as well. So that is something that you may want to consider. But if you would like to sell right here, you may want to set your stop loss above the retracement level 61.8%, at least 35 pips above, and that would cost you about a risk of close to 100 pips. But the reward that we're looking at is of course a lot further lower, but that still it still makes sense to go for the sell at current level, unless we wait for the price to retrace to 61.8% retracement level. Alright, so this is for the Aussie against Japanese yen. Last but not least, I would like to touch on the pound against Australia dollar. Back to the weekly chart, we do still note that the price has yet to reach the bottom of the rising trend channel in the weekly chart. So still expect the price will fall a little bit further before it resumes its appreciation. And in the day one chart, we are seeing that there's a falling trend channel, so expect the price to fall further as well. So right now, let's go in all the way to the one hourly chart. We have seen that the price has retraced very significantly, and then right now it has fell again and at least I do see that it has break below a trend line right here, so that does suggest that the price will resume depreciation from here. And therefore right now we are just waiting for the price to retrace back to the resistance level at 2.07885 to go for the sell again. As we can see that this is the key resistance level and probably a previous support level. And as the price reaches this level, it does give a structure for the price to go to fall further from there. And that's for the pound against Australian dollar. Alright, so with that, I've come to the end of today's trading analysis video. So thank you for watching, and I'll see you again.